Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we'll be looking at the technical analysis on the currency pair, on the metal, gold, and first we'll be talking on fundamentals before we move right down to technicals, which is purely what we'll be seeing on the chart. Now, gold price forecast, we've seen that XAU USD has a recovery loss momentum above $1,970, and we have our eyes on the US GDP. Gold price recovery lost momentum after climbing to the $1,982 mark. Additional rate hikes from the central banks might cap the upside in the gold price, while market participants are watching the development of a stimulus plan in China. Traders, of course, will focus on the second quarter US gross domestic product GDP. Now, gold loses its traction after rising towards the $1,982 heading into the early European session. Precious metals trade on a positive note for the third successive day. Today, Thursday, and the XAU USD currently trades near the $1,975, up 0.19% for the day. And as expected, the Federal Open Market Committee, FOMC, hiked its interest rate by 25 basis point BPS to a target range of 5.25% to 5.5%, and the rate was last seen just before the housing market collapsed in 2007 and marked the highest level in more than 22 years. Fed Chairman Jerome Powell stated following the rate decision that inflation has moderated somewhat since the middle of last year, but that the Fed's 2% target has a long way to go. Even so, Powell left room for the Fed to keep rates unchanged at its September meeting. He has added that the Fed will consider the incoming data for additional rate hikes if needed. And this, of course, hints that the Fed could, of course, close to the end of its rate hike cycles, might cap the downside in precious metals. Now, it's worth noting that gold is a quite sensitive pair to rising interest rate as they raise the opportunity cost of holding non-yielding bullion. Nevertheless, the ECB is expected to raise interest rate by 25 basis points today, and market participants speculate that ECB will raise borrowing costs in July and also in September to bring inflation back to target. However, some concerns about economic slowdown in the Eurozone might convince the central bank to pause rate hikes. Investors will take clues from ECB President Christine Lagarde about further monetary policy. Hawkish stance from the ECB might be a headwind for gold price. On the other hand, China, the world's largest gold consumer, signaled additional support for real estate sector and a series of measures to stimulate domestic consumption amid a sluggish post-COVID recovery. And this, in turn, will support further upside in the gold price. The development of an additional stimulus plan coming in China will be the spotlight for most gold traders. Now, moving on to the market technical analysis, we're seeing the market participants will focus on first reading of the US gross domestic product GDP for the second quarter and the core personal consumption expenditure PCE price index momentum, durable good orders, and initial job claims data later in the day today. Now, this data might influence the USD price dynamics and determine short-term trading conditions around the gold pair. Now, today's last price is seen as 1,975.81 until a daily change of 3.68%, and overall daily change percentage is 0.18. And today's daily open was at 1884.5. Now, previous daily high and previous daily low at 1978.39, while previous daily low at 1962.06. So what to expect from this? On some technical level, we are expecting a sell-off to at least 1964.15. So if we make an entry at this point and let our trade run down to 1963.10, we're looking at about 121 pips from that point, of course, which is good money. And that's our technical analysis on today's metal, gold. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at Ford. And headlining, we're seeing that Ford earnings will follow GM and raise its outlook for the year. Now, Ford Motor Company is slated to report second quarter earnings after the bell on Thursday, and Detroit automaker has a tough act to follow because both Tesla, which is currently minus 0.35%, and General Motors have reportedly quarterly earnings comfortably above investors' estimate. Now, moreover, GM has raised its 2023 outlook for the second time this year. So a bid and raised bar is quite high for Ford. While Evercore ISI analyst said in a note on Wednesday that Ford, like many automakers, have benefited from ongoing new vehicle demand and on its most profitable mobile said that iCars.com macroeconomic factors including inflation rates, interest rates, and also employment numbers are setting up to constrict consumer buying over the next few quarters. Now, watch for price cuts as we see, and we are slipping profits to the next signs of a shift in this economy. Now, here's what to expect. Ford is reporting GAAP earnings of 50 cents a share in the second quarter, which would compare it with 16 cents a share in the second quarter of 2022. Adjusted earnings are seen at about 54 cents a share. Now, estimate which we are seeing from the buy side, we have fund managers and a lot of people call for adjusted earnings of 62 cents a quarter. Now, the revenue expected, surveyed by about $43.2 billion for Ford, which would be up about 7% from $40.2 billion in the year-ago quarter, while estimates revenue expectation are at $43.17 billion. Now, the stock has underperformed the broader market slightly, up about 17% so far this year, versus an advance of about 19% for the S&P 500 index. Now, things look a little bit better in the last 3 months, with Ford stock up 18% compared with a 12% gain for the S&P. So we are looking out for more gains to this, although it showed a lot of downside in recent times, but respecting the fact that we are seeing some improvements in their daily revenue, we are looking out for retracement back to at least 14.01, which is about 38 pips, and probably an extension to cover up this gap, and maybe about 152 pips at 15.19, which is of course good money. And that's our technical analysis on today's stock market. Ford. I remain your host, Nick. Bye for now.